You know what I'm seeing right now? It's not just Bitcoin fear, it's macro fear. People aren't just scared of red candle. They're scared of everything at the same time. And let me put it this way. You're walking into the grocery store and your cart is half full, but the receipt looks like you bought the whole aisle. Tariffs, inflation, higher costs on basic stuff like meats and eggs. That hits people in real life. Then you turn on the news and they're talking about foreclosures ticking up. Rate cuts, maybe not coming. Markets all over the world selling off. Tech's down, AI stocks down, risk asset is down. So what happened? Most people don't think, they react. They don't ask, is Bitcoin broken? They just hit the sell button on everything because they're scared and tired and confused. That's macro fear. It's not about one coin. It's about the whole system feeling shaky. But here's where I want to talk to you like a friend, not like some trading guru. There are really two types of people watching this, the trader and the long-term holder. And there's a third group most people never pay attention to, the wealthy, because the wealthy don't react to crashes the way everyone else does. They don't panic when markets bleed. They prepare. The trader sees all this fear and thinks, okay, I'm going to time this. I'll sell here, buy over, buy lower, flip this move, short that pump, long the dip. And sometimes, yeah, they catch one or two good moves. They post a screenshot. It looks amazing. But over a whole cycle, most of them bleed out. Fees, bad entries, liquidations, FOMO, panic. It's all adds up. Long-term holder sees the same fear and thinks something completely different. Nothing about the core has changed. Bitcoin is still scarce. The network is still strong. Big player and countries are still accumulating. So this pain, this is the toll I pays for long-term upside. But the wealthy, they zoom out even further. They look at crashes the way a business owner looks at a slow season. They don't panic. They position themselves. When assets fall, they don't see danger. They see discounts. They buy quality asset when prices are irrational, when emotions are high, and when the average person is running to the exit. The wealthy understand something very simple. When there's blood on the street, that's when the best opportunities appear. They don't wait for calm. They don't wait for the confirmation. They don't wait for the headlines to turn positive again. They act during fear, not after. They review their long-term strategies, look at which strong asset just went on sale, and they accumulate while the crowd is throwing assets away in panic. Sorry, my water softener is kicking in. That's why they get richer every cycle, not because they're smarter, but because they're calmer. Let me give you a simple picture. Imagine someone who bought Bitcoin at $20,000, watched it fall to $3,000, didn't panic sell, just held, and maybe even kept stacking a little along the way. That same person then watched it climb to $69,000 per coin, then it crashed again to around $15,000. Ugly, right? But they still held. Then we move up to new highs over $100,000 per coin and pull back into the 90s, maybe lower, and they're still here. On paper, that person held from the top all the way to the bottom. Multiple times, people will laugh at them in the middle of the crash and call them dumb. But zoom out. 20,000 to 3,000 to 69,000 to 15,000 and to 126,000 pull back. If you survive that entire roller coaster, you're not dumb. You're early and you're stubborn, just in the right direction. That's the difference in mindset. Traders obsess over perfect timing. Long-term holders obsess over owning more of the right thing and given its time. And the wealthy, they obsess over cycles. They know fear exaggerates prices, ups or down. They remember that every crash in history eventually turned into recovery, and they use those moments to strengthen their positions instead of abandoning them. And this doesn't just apply to Bitcoin. Look at history. The people who held good real estate for decades through recessions, rate hikes, and scary headlines usually came out ahead. The people who held great companies, not meme stock, but real businesses for 10 years, 15 years, 20 years, through crashes and hype cycle, usually did incredibly well. Same thing with gold over long periods. In almost every wealth story, there's a common theme. Someone picked a strong asset, added to it over time, and held on when it felt horrible. And here's the key point I really want you to hear. Holding anything blindly is not the secret. Holding good assets with strong fundamental is. If you hold garbage for 10 years, you just got 10 years older holding garbage. If you hold something scarce, useful, and globally demanded, like Bitcoin, and you keep stacking within your means, you're giving yourself a chance to benefit from the big picture, not just the daily drama. So when macro fear hits, inflation fear, rate cut fears, AI bubble fear, is the war ending? Fear. Ask yourself a different question. Is Bitcoin broken? Or are people just scared? Because if the network is still running, miners are still securing it, big players are still quietly building decisions, and the world is still printing monies and debasing currency, then this whole high to low to high journey is part of the game. It's not a bug, it's the path. Trader will keep trying to outsmart every move, and some of them will post wins. Most of them won't show their losses. Long-term holder won't look exciting days to day, but over a cycle, over multiple cycles, they're the ones who usually come out with the real story. I just keep buying what I believe in. I held on. And the wealthy, they look back at this fearful chapter and say, that's when I build my future. Now, I'm not a financial advisor, guys, and I'm not here to tell you what to do, but I can tell you this. In every major asset class across history, the people who combine good asset plus patience plus consistency are the ones who end up with the best outcomes. So if you're feeling the fear right now, just breathe for a second. Zoom out. Ask yourself, am I trying to be the smartest trader in the room? Or am I trying to build something real for my future? Those are two very different games. And in my opinion, the long-term games, the same game the wealthy play, is the one worth playing. And honestly, that's probably enough for one video. I don't want to overload you. This is a lot to take in at once, and it's something you should sit with, think about, and let it sink in. We'll keep breaking this down together, piece by piece, because this journey isn't about perfection. It's about direction. I'll see you in the next video, and just don't forget to hold tight and stack it right. Take care.